Mic check, mic check.
Good evening, Kish.
Hey, can you guys hear me clearly?
Yeah, mic check. 1 2 1 2.
Nice. Been a while. My apologies for being a little bit on the ghost side. But yeah, just know that lots of good things in the pipeline. Should I decide to make a couple of things public? Lots of goodies around. But Nasdaq, I don't know, where do I start? It's been a while. Particularly because I took off all the indicators. All of these have. All right, give me a second. Let me see if I can find a chart with just enough stuff that we could talk about. What's the name of this indicator again? WR. Okay, I'll use that. FOMC in 5 minutes. WR. That's going to be a little bit of a higher time frame. I'll slap on tester. I think this is the one. Been a while. Let's leave that there. And let's use everybody's favorite time frame, M15, and then let's talk. So, pretty much,
where we left off.
This is an indicator that I use for daily bias. I can take all the trades.
It's amazing. It'd be awesome to see us take one side of this range. That would create a full balanced price range between the high down to the low.
So yeah, pretty much my bias indicator tells me the bias for the day. So that comes in at 5. I think I mentioned it before, so no need to reinvent the wheel. On second thoughts, I think I had something on this time frame. Hot mics. I'll fix them in a second. Give me 1 second. I'll fix the hot mics.
Change a couple levels around.
There we go. Mics all fixed. And then we can share this. There we go. All right, much better. So the last time I did a public call, I think this is the template I used. Pretty simple, just encompassing everything before 7:20. Daylight saving, so it's pushed to 8:20, right? Before 7:20 is over here. Picture that as a range, start your trading there. Pretty straightforward approach. So, with that being said, it will require a little bit of a unconventional approach for those who have maybe not seen me do a call in a while. We're pretty much looking at the bulk of your trading or bulk of the trading day happening inside this window, and then the other aspects of it are irrelevant. Pretty much. So this is an idea that introduces a couple things to you, but to go ahead and speak on all that now is going to take up a lot of time. So let's just flow with the call. For right now, we're focused on FOMC. I don't want to see this lower, primarily because it's the start of a new year, and I want to see the previous quarter being visited. I don't know what's going on. Maybe I need to hide.
Hi, Kish. Finally.
It's been a while, right? My bad. So FOMC, the first part where the data comes out is going to be in about 30 seconds. So I'll tell you why I don't want to see lower prices. Starting with new year, I want to see some liquidity sweep from the last quarter take place. So I was bearish because I wanted to see EQ get wrecked. It didn't get wrecked. We started trading higher. So I cut all bearish bias until that gets taken. Intraday, sure, but long term, I'd love to see this taken before we see any type of aggressive bearishness. And I'd love to buy below here and then hold. So here comes the data. Bam. Uneventful, as expected, because usually at the data release is not when the volatility comes in. It comes in 30 minutes later at the press conference. So yeah, I'm a little bit almost flustered. I haven't done a call in a while, and I don't remember exactly what I spoke about publicly. So I'm trying to grasp a footing for how to analyze this price action for you guys. So to put it simple, I'd love to see the quarterly high get taken before any type of aggressive bearishness. So right now, on an intraday basis, you can use H1 to frame pretty much anything you want for bias and direction. And if you are old TCM, then this idea should not be foreign to you, which is to use Monday and Tuesday as a range, and then look at the rest of the week to look at the rest of the week to sweep that liquidity. So if we were doing that this week, I'm not, because I'm just waiting, just taking the day as it comes. If we're doing that, then we'd see that last week range ran everything that you want from a perfect reversal. Range low ran ICT breakers, FEGs, IFEGs, market structure shift, everything you want. Expansions is all here. So then higher prices, it's reaching higher, you're buying. Then we gap down, hit previous weekly open, top of the range, and we started rallying from there. So everything here is fine for a bullish market, but I don't want to see that taken before heavy bearishness. So coming into the day, you'll remember me talking about longs on NASDAQ. Not a lot of them worked out. Most of the longs I tried today failed. But gold was more forgiving. Right? So yeah, you know how this works. I am usually a little bit lost for words until you start asking questions and I get a feel of what the audience is like, and then we communicate afterwards. So as far as the analysis goes, this should be dead and flat until next 28 minutes when the conference starts. So if you traded today, it'll be a nice time to kind of talk about that. If you're planning to trade FOMC, also be a nice time to talk about that. And yeah. Let's talk liquidity sweeps and invalidation points, okay? Good one. And can you briefly touch on your trading windows that you're using now? Sure. All right. Liquidity sweeps and invalidation. Instinctively, I start thinking about if we have, let me annotate. If we have a range holding liquidity and price is running on that or sweeping that liquidity, so let's say, bam, bam. Usually the assumption is somewhere here, you want to see some type of evidence that we're not trying to expand above the liquidity high. So like a CSD and then lower prices, right? How do you invalidate this? Easy. When price is taken this high, you're focusing on how is it being taken. Ideally, you want to see them not close above here. That's ideal. If they do close above there, then you want to see an order block, right? So make it a little bit cleaner. In a perfect world, wick rejection happens right there, and we keep closing below the liquidity high, and then the market trades lower. For an invalidation, if that's the liquidity, and this is the first candle that comes to the level. What just happened? Anyway, doesn't matter. If this is the first candle that comes to the level, and it closes there, I start thinking this run higher is likely to continue if the previous candle, let's say it's highs there, and the next candle creates a FEG. That's the first thing. If an FEG is there at the liquidity pool, horrible joins, then I don't think this is going to just fall. I think we're likely going to get, continuation higher. That's the first thing. The second thing that I don't like is if we have that range, and let's say that's the range high there, and let's say there's an expansion somewhere in the run that takes that high, and for whatever reason, we have a down candle, not drawn to scale, right? Not drawn to scale. Let's put the range low, a little bit lower. So somewhere inside the range, you have an expansion here that's running this high, and it closes above. The down candle, the last down candle, before a series of green candles that are closing above each other. If we get below that on a closing basis, I'm bearish, which means between that down candle and this green candle, some FEG should be here, and buying that becomes nice. If a down candle gets printed right after we close above that, and a down candle is wicky, so it's the body is not closing below the green candle, but it's closing inside. I don't like that candle by itself. I don't see that as heavy bearishness. If that candle prints and then we close again, and then we have one green candle, which is a candle that's taking a high, and you have a down candle closed inside. Let's say it's closed inside. And then the second candle now closes like this, and that makes me really, really bearish. So we have all the elements that make trading predictable, which is number one, a key level, and number two, a reaction to that key level. The reaction to the key level is pretty much what you want to be able to trust. If you ever enter a trade, get nervous, it's because you don't know what you're looking for at the level. If you enter a trade and then what you want is perfect, then chances are you enter here and you will even entertain not using a stop because you trust the fractal delivery at the level more. At least for me, if I'm ever going to be not trading with a stop loss, this is one of the things that make me trust, not using a stop. The level is a solid level. Liquidity is there, guaranteed. The reaction to the level is not showing me that we are continuing to run through the level. It's not a run on the level, it's a sweep of the level. And that makes me trust that. So if you know what makes you trust being able to short that high, then proof by contradiction or something like that, I don't remember, it's been a while. If anything outside of that prints, it's not supporting the idea that you're bearish. So if you don't want the FEG here and the FEG prints, don't sell. If you don't want the FEG there and the FEG prints and you don't sell, but you start seeing down candles, but the FEG is still open, don't sell. See? So it's easier to know what is wrong if you know what is right. Sounds like a whole lot of mumbo jumbo, but you think about it, you get what I'm saying. Sweeps generally don't expand or continue to expand. It just runs, it just sweeps it and come back. If it's a run on level, you're likely going to get an expansion. So if you ever find a place like a daily high, daily low, and you're watching that, and then the market gets there, and we are, let's say, let me draw. Let's say this is the level. And then in this price swing going up to the level, you're getting green candles and we're closing above the high. We're closing above the high. We're closing above the high. I mean, try to not think that you are Superman to just put an entry and it's going to fall. Wait for the expansion to fail. Because expansions are one of the first signs that the market is continuing in a particular direction. And if it's continuing, ICT month 1 says we don't expand and then reverse. It expands, then it retraces, it fails to expand, then it breaks down, then it retraces, then it's gone. So this by itself tells you nothing, or that by itself does not support that this is happening over here. This continuation must fail, and then that happens, and then you go good. So, in conclusion, we took all of this logic and made it into a simple tradable model that you guys nicknamed the barricade logic, which says if a market is continuing an expansion, defined as in bullish expansions, we're closing above green candles highs. The last time we close above the green candle high, mark the high of that candle. That becomes a key level where you want to see something happen. What you see there tells you your bias. So if it expands, stops, closes above here, that green candle must be an order block. So you look for signs that says it is. If it's not, then you don't trade. Let's look at a couple examples of the chart and then I'll go back to the chart. I'm just picking this random one, right? If you want to pick this, the same logic should hold. Green candle, we close above the high, we close above the high, we close above the high. We stop closing above the high right there. That's your key level. If I'm going to go short, my order block should print there. So if we get this and the FEG is there, you don't short unless that FEG gets filled in, or you don't short unless you get evidence of change in the state of delivery. Your order block, I'm only pointing out FEG because it's actually there. We'll probably find some other examples with no FEG and you get what I mean. So FEG gets closed in somewhere around here. That's a short. I don't know how many points this is. That's a short at 90. And it goes all the way down to almost 60. So not even 30 points. But if you have rules of engagement, the market expands more than 20 points in your favor and you're scalping, you should not end that trade with a loss under no circumstances. Unless you're trading equities open. That's the only rule I have for doing that madness. You're in a trade, it's up more than 20 points, break even. Even if you take nothing off, break even. It stops you out, okay, no big deal. But yeah, using that same logic again, we have, I'm not form fitting, by the way. There's no consecutive down close candles there, unless you're going to look at that part. And then that's micromanaging too much. Consecutive green candles, that's the high. We close below, you're looking there for a short. Enter, that's a loss, no big deal. This market is reaching higher. Consecutive green candles that are closed above each other, here, here, expand through the level, FEG is there. You do nothing until that FEG is closed. entry, stop. I'm guessing target is there, or that's significant because of the structure. We close below here. I decide to hold. Scaling, maybe you close there, whatever. So pretty simple. Down candle, closing below, only 2 of them. Horrible. That's what you want your bullish order block to be. There's no FEGs there, but that's your order block candidate. We close above the order block candidate there. You go along here. Maybe that's your stop or something in there, your choice. And then you get that. That looks like it's going to the high up there. So that's how you invalidate and validate runs on liquidity. That's how I do it. Okay, move on to the next question. Can you briefly touch on the trading windows? Oh, trading windows, simple. I try my best to be out of the market until here. I will not look, I will not analyze, I will not check until here. At here, that time I look back and I mark my levels if I'm doing manual marking, and then there. I aim to end my trading day with executions around there. So pretty close to here to noon, I should already be done with executions. If I'm holding a runner, then I'm holding a runner. And I'll not trade again until maybe 1 o'clock. I try to not trade this all. 12 to 1, or pretty around that window, 12 o'clock to 1 o'clock era. I try to not enter new positions. There are rules for what you want to look for. And then if they print and you choose to participate, sure. But for the most part, I'm not looking for new entries inside here. Yeah. So 95% of my executions takes place here. If I'm going to be trading Asian session, which is very rare, it's likely going to be after 8 o'clock. I don't know where 8 o'clock is, somewhere. I'm going to be trading somewhere after that. And if everything is everything, I'll end by 10 o'clock. I don't want to be doing too much in there, because then I'll carry this over here and I don't like it. So this is how I traded most of my career. Now I don't make these decisions anymore. I just have that indicator. Basically determine my bias, and I stock setups in line with that bias, etc., etc., etc. Do you still use ONS? I use ONS, yes. The idea, not the exact range, but the idea of overnight trading and what should be there to help me formulate an idea in New York, I still use that. I will never tell you to not use overnight session. I said this already. It doesn't matter how intricate I get into some of the things I know. I will never tell you to stop using overnight session, because it's the crutch of almost everything I look for in New York. By definition, the overnight session has specific roles and functions that have to be present for New York to be tradable. If they're not there, New York becomes, messy. So yeah. Touch on the 2 candle theory. I think I just did that. What suggestions or approach you have for people that are looking to trade London? Conceptually, you have to remember that London has been known to run stop loss. Think about it. Think about it for a second. Remember when you just started trading and all the gurus used to post their trades and explain AMD, and they'd use Asian for accumulation, London for manipulation, and New York for distribution. And it made sense to us, right? Because we would see a whole lot of daily highs and lows forming inside that window. Exhibit A, this high was formed at 1:30 a.m. Assuming you look at London session as around 2 a.m., you'd say that was formed before. But potato. If you're trading London, I find that it is always better to trade for rebalances than to trade for like expansions. Most times when London breaks out of a range, you don't continue. I don't have the exact number now because I no longer look at that. But if you do trade London and you have a range, you start a little PowerPoint or note study that shows how many times does London break outside of my range and continue in that direction. And you will find that it's not very often. So you want to look for more reversal type setups in London. Best way to do that, if you have a fixed range, first thing you do, start journaling what's the pip count of that range on a daily basis. Okay? Then you start looking at deviations of that range. If your range in London is large, do you find that it's going to less deviations before it reverses? Or if it's small, do you find that you expand to more deviations in London before it reverses? And that should give you at least a framework for what to expect. And then you don't trade an expectation, you trade the confirmation, right? Unless you're accepting the risk with no emotions, try not to trade expectations. So if you expect the reversal to happen here, don't go put in a sell limit there where the reversal should happen. That's crazy. You put a line there and then you say, if it's going to reverse from here, I want to see something that I can recognize. Then looking for that should be easy. That's easy. But yeah, if you have no choice but to trade London, again, that's the best thing I'd say. Just find like some range, and then you try to play the short side of this to there. If you're looking at this and you're realizing that range high was broken and this expansion, the part that broke the high, the retracement or the rebalance is not destroying that expansion, then you might have one of those continuation in New York where that happens. But for the most part, you want to be trading this. You don't want to go, oh, we broke out, let me buy and hold because I have to go to work. In my experience, it never works. And I remember days when I would get really good entries in London and just mark the price, and then I would check where price is at now in New York, and I would think, yes, I'm in super profit. But then when I go back, I'd see that it stopped me out first and then so not a big fan of London. So yeah, study how to rebalance and continuations. Study those for London. So if the rebalance is there, it should be easy. If it's continuation, then the rebalance will fail. That sounds very, very meh. But if you think about it, that's really how you trade London. If the rebalance is going to change market structure and become a reversal, then you should have definitions and rules that says, if we break out and come back beyond here, get in on a retracement. Or if it breaks out and it can't get below this point or above this point, then it means the breakout is going to continue. And you should be fine. When you mark 7 a.m., what look back range do you look at? That's what you call, a tricky question.
Damn, I want to ask something.
So, okay, all right. Let's have a quick conversation about this. It is not what you look at or look back at 7 a.m. that makes trading after 7 a.m. beautiful. It's what you look for. So if you, let's say, here's 7 a.m. and it says the start of the day is somewhere in the vicinity of there, right? I'm gonna take this middle line off. Bam, bam. Let's say at 7 a.m. you're looking back at that range. There we go. By itself, it won't offer much insights outside of refining pattern memory. And I'll explain what I mean. There. Pattern memory is when you look back here and you only focus on high, low, equilibrium. That's all. And sometimes open price. That's pattern memory, right? Looking back here for something is what do you want to see in here that tells you how to make your next decision. So again, I'm trying to be as general as I can to be as inclusive to every single trading strategy there is, not just my approach, right? When you look back, are you looking at the range for efficiency to say this range is efficiently traded? So after 7 a.m., I would like to see the market get outside this range and stay outside this range. Or it's efficient, so I'd like to see the market retrace to 50% of the range and then find support or resistance depending on where is this opening price in relation to EQ. So if I'm bullish, I don't want to see it retrace down to EQ higher. If I'm bearish and the open is below EQ, I don't want to see it retrace up and lower, which instinctively says if EQ is below us and I'm bearish and we open above it, I want to see us close below EQ or expand below EQ. Anything that says lower and supporting bearish or bearishness, that makes it easy to not just guess a bias, but stick to it and create rules. So you can say, between 7 o'clock and equities open, I would like to see the market get below here. Is it getting below there? Yes or no? That's it. If you are a scalper, then you can look at the delivery to the level, right? And I may be running away with the question, but it's okay. So you're looking at the delivery to the level. What does that mean? It means how is price moving towards this level? Is it giving me everything I want to see that says this is a sustained move? It's going to continue. Meaning, is it expanding? Is it wicking the level, pulling back, which is clearly not showing me strength in lower prices, right? Without the algorithmic logic. It's not saying that. So then you can start doing that. And then is the semi-algorithmic pattern trading approach, where you just look at this logic and you say, okay, this is where we are. I'm bearish or bullish. After this range prints, I'd like to see a reaction happen to support something. So let's say, forget about the fact that this sold off today. Let's reason it from both perspectives. If you're bearish here, between here and 9:30, you want to see something happen. Ideally, that's going to be close below here and stay below here. If we don't get there and 9:30 retraces, what would you be willing to accept as a suitable reason to still be short? 9 times out of 10, it's going to be respecting equilibrium, premium, something. I don't know what it is for you, but that makes sense. Similarly, if you're bullish, this prints, what would you want to see to be bullish? First of all, you can't have a key level below you and be bullish. So run that level, CSD, higher prices, that type of thing. So that's an easy approach to how to look at the market with a timed perspective. If you so happen to be able to code, this by itself is something you can code and test. One, define this range, you name this range 1, you name this range 2, and you name this your trading window. That's stopping at wherever you want to stop your ending your day. Then you say, if this range is taking this high, or if bias equals something, print an entry after this high is taken and a CSD, if you can code CSD, and then target is here. Or if we print here and this opens below EQ and it gets the EQ, if we close above EQ and the bias is bearish, go short after something happens at this candle's lower open price. So you get an entry there, or at this candle's open if you're using a close. So the moment this closes, you get an alert right there at that. And then it says short there, target there, and that's it. That's a bot by itself. So without intricacies, again, that's simply enough. That by itself, I think, could be a trading model. If simplicity is what you're after, and I'm always trying to help you with that. So there we go. Another question: could you expand on ONS, please? What are you looking for? If it's not time bound, how do you look at it? ONS is time bound by definition, partly because futures market is not open, after a certain time of the day. And it opens again at equities open. So all of that is overnight session, if you want to look at it like that. However, the persons who were making the market and actively involved did not think encompassing the entirety of from the PM session to equities open as the overnight session. So to accommodate for persons who or markets that were open there, the range was refined, etc. So you could use London range. You could use the range I gave, which is 4 o'clock to 8 o'clock. And if cat's out of the bag, it's 4 o'clock to 8:15. Who knows? Look at that range. And again, anytime you're using a range theory, you have to understand what the range is telling you before you start to trade. Is this range saying the range is inefficient? We're likely to rebalance before we do anything else? Yes, no, you don't know. Is it saying the range is efficient, so there's really nothing to go back for inside the range? Is it saying the range is efficient and the market is stuck inside an efficient range, which likely gives a seek and destroy profile? So that's something that you might have to brush up on if you're, realizing that you're making mistakes around that. And I mean, I got a lot of time on my hands now. I could probably make some tailored YouTube videos. I haven't done anything on YouTube in a while, so maybe I will. Whoever asks a question, just tag me in the Discord, and we'll make a list of some maybe 15 to 20-minute videos that we can get out of the window. By the way, FOMC is here and it's very uneventful. Yeah. It's not giving me anything to say that it's bearish at the moment. So I'm wondering if it's holding price at the lows before it pumps. That's my first expectation. It's not something I want to trade because I don't trade expectation. So in light of only trading confirmation, what confirms higher prices here? It's a rhetorical question you don't need to answer. And then you find that. For me, I look at the last expansion down. Market price, last expansion. Where's the last time we have two down candles closing below each other? We don't even have one on this time frame, but let's not do that. And let's say here, the last time we had down candles closing below down candles lows was there. Nope, actually not here. There's one just below it, right there. So if for some weird reason I feel the urge to trade today, again, not gonna happen, I'd say close above here, pull back higher. But I'm not going to trade. But just to help you understand what confirmation looks like for me. There we go. Next question is, can I apply the rules for ONS to trade the submission range? Yes. Full stop, yes. But then again, you have to remember that that is subjective to, based on the time you start trading, where are we in relation to submission range, high, low, EQ? And then if this, then that. If we get to this level and this happens, then sure, why not? I wish you said that slow. I think it's been recorded. Time for scalp, do you frame them all 50 M15? No, I frame everything I do around timed ranges. So the time frame really doesn't matter unless I want structural confirmation, like a specific order block. The time frame you're trading doesn't really matter, if you understand. So I don't use a M15 period unless somebody I'm talking to or having a 1v1 uses a M15, then I will entertain for their understanding. Outside of that, M1, M4, M5, M20, M16, very unconventional stuff. But yeah, could you show us a few examples of how you would derive bias for New York session using H1 delivery when you confirm if H1 is aligned with daily and what your process is if H1 is not aligned with daily? Okay, the held rates. Okay, makes sense. If rates are held though, now it's going to continue going higher. Wouldn't that be likely? Either way, I'm still interested in the Q4I from 2025, so I will scalp. What was that question again? Horrible memory. Few examples of H1. Okay. Bam. All right, so where did I get this chart from? Oh, I don't want to touch this chart. Let me use a chart with no drawings. Which would be that one. So let's go bam and bam. Okay, so it's a little bit biased for me because again, I pop to the daily chart. This is what my daily order flow tracker looks like. Whenever the background is green, I'm looking for longs. Whenever it changes, I'm looking for shorts, etc. So all I do is I have the background showing daily order flow, and I look at the H1 from time to time for, when can I play shorts or play whatever, because I like being a bear. Okay, there it is. I'm a bear at heart. I like selling. It just feels natural, and I know markets are meant to go higher. I don't know how to explain everything else outside of that. I just like selling. So I look to the H1 to support daily bias. So again, the background here is showing you daily order flow. When it changes, my bias changes. So on Patreon 2 days ago, I posted that H1 is bullish and I wanted a high inside here. It closed above. I said, I'm cutting my bearish expectations. Full stop. I don't argue with it. That's it. But what do I look for? I'll show you a couple of things for what I look for. So let's say this is bearish order flow on the daily chart. It automatically means at the start of wherever the red boxes or red background is going to be a daily down candle, right? So I need open price there. What do we know about daily down candles with order flow? If we are bearish and it comes back to a bearish order blocks, a down candle open price, you don't want to see price closing above that. You don't want to see them going lower. Okay, so lower. From time to time, you'll get a daily high being swept at these levels. It's nothing to stress. Yeah. But you use that as a key level most times, and you find that the H1 overlaps pretty nicely. So shorts there, shorts there, shorts there. What happens there? You wait, all that good stuff. You make this a little bit better by controlling your engagement. So let's go, let's start right there. Let's say we just got a bullish bias change. New York session, 7 a.m. Look, this bias comes at 5 p.m. Okay. I'm going to go all the way to 7 a.m. There. From that opening price onward, I want to be a buyer. Realistically, you're going to be looking left of this, right? So let's try to hide the data and not cheat. What are you looking to target if you get a bullish bias? And this is where you are in relation to this. I'm seeing all of this drop. I'm checking if FEGs are there, and I'm checking what days these are. I got my reversal on a Wednesday. So the first thing you're thinking about is Monday, Tuesday high. The relationship. Did Tuesday take Monday's high? Well, this is the highest high here, which is suggesting that Tuesday is below here. This is how you can approach it if you're being studious. I'm not always like this. These are your daily highs. Purge and revert theory says this is the event day because it's sweeping these lows. I'm assuming everybody knows purge and revert because you can't know ICT and not know ICT's greatest works. And apart from introduction to what a FEG is, purge and revert is one of his best stuff. I don't care what anybody says about 2022 model, blah, 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 blah. There. This automatically becomes the range. And again, if you know overnight session theory, ignore the time frame, treat this like overnight session. What do you want to see here in relation to that? Close above EQ, take the high. Close above EQ, that's it. Game over. So if you can identify, again, if you can identify on an H1 chart where your liquidity pools are in line with your order flow, this shouldn't be a problem. Shouldn't be a problem at all. But yeah. And then it's been bullish. Indicator's been bullish since then. I have played a lot of shorts in here. Don't mind me. I'm me. Yeah. But yeah. That's that. So you use H1 in line with daily order flow, and it makes life easy. Since we're having this call, I was going to make something like this available where you get like bias and stuff like that. But yeah, I kind of gave up most of the subscription stuff. I don't know. Maybe, because somebody's making a website for us and he has to be compensated for his work. And if it's to help you, you're going to pay for it. So, yeah. So that is something that should be in the pipeline, but still working on that. But yeah, I'm at a loss for words. I'm not sure what we're talking about. But yeah, if I decide to make the alerts available for you, then yeah, we'll talk about that. But until then, just know that this indicator exists to tell me the bias every day. And wait, what's the name of the indicator that I was showing you just before this? I'm going to overlay it as Confluence. So it's called TCM V1 DST. TCM. Now let's type in DST. TCM V1 DST. There we go. I'll go to where is it? There we go. So, quick run through. I'll do the last 2 weeks. So, 1, 2, 3, 4, 5, 6, 7, 8. I'll start here. I'll start on a Monday. There. So let's say something like this. Bias says order flow is bearish. At 7 a.m. we're here. First thing you notice, well, sorry, that's not 7 a.m. 7:20, really. But because it's an M15 chart, it can't show you that. So 7 o'clock is here. Let's make this a little bit of a Q&A before I continue, right? If you're bearish, the bias is bearish, and at 7 a.m., when the New York Stock Exchange opens, not equities market, the New York session, the New York session starts at 7 a.m. Okay, full stop. There we go. At this time, you have a bearish bias. Realistically, what are you planning to do? How are you planning to make a decision here? Premium prices, right? Oh, the indicators are not yet available. They're part of a project I'm working on, but I've isolated parts of the project and thought that they were good enough as standalone. So the bias by itself is great as standalone. It's at a really good accuracy. Yeah. So yeah, let's say that here you're looking for there's too much going on the indicator, and I can't edit the time right now. So let's just hide this for a second and do this part manually. If you have a bearish bias right there, and I have no idea why oh yeah, I know. There we go, right? And you could pull this as far back as 6 o'clock. Before that is just crazy, right? So if you have this, and this is the start of your day, and you're bearish, the first thing you're thinking about is premium prices. No, the first thing you think about is how far away is this high and this open price. I'll tell you why. Let's put them on, right? If we're retracing to premium, you can put EQ on as well. If I start my day with the expectation that price is going to trade higher, and from the start of my air quotes day to here is north of 50 points, why would I not want to buy that and be done? If from here to here is north of 50 points, then why wouldn't I? So you want to check what the opportunity is like, or what's the environment like before you go imposing a bias. And I was trying to explain this to somebody recently, that there's a difference between people who understand how the algorithm works and people who think because they understand the algorithm, they are just going to do better. That's not true. This is a bearish bias. Somebody short here got 50 points, didn't get anything, target break even or a loss. Why? Because people think that because they understand how the algorithm works, they can throw risk management out the window and just be crazy. I only do that when there's absolutely no reason for me to be wrong. Shorting here with no stop loss, and this is here, is a reason for me to be wrong. Shorting here with no stop loss, with that high there, is a reason for me to be wrong. So you want to minimize that as much as possible. Okay. So let's do the next best thing. If we open here and it's expanding, remember what we said earlier: key level, reaction at key level equals bias. If I grab this, start new, I'm gonna stop it there. I'm gonna go to a 5-minute chart because I really don't use a 15-minute chart. So yeah. 5-minute chart. Nothing has changed. You have a bearish bias, you open in discount of the range. Market's trading up. Is this closing above here? Yes, so the market's expanding. If the market's expanding, you want to go short when? Highest candle in the expansion, or not the highest, yeah, highest candle in the expansion. This is closed above this high. You want to go short right there with reason. Okay? Is this a reason to go short there? No. Why? Because this is not yet reached. What's happening here? You get an order block print. And if you're an IFVG fan, you're getting an FVG there. An FVG to your key level has a high potential of being an IFVG. I don't mark these, but sure, you can, whatever. There's your order block. Key level, reaction to the key level, you now have a plan. You can't deny that. Stop looking at what's happening next. Look at just this part. Between 7 o'clock and 7:45, you now have a clear plan as to what you want to do. I want this run above here to stop and I go short. If it does not stop, then the level is higher. Sorry, it's going to reach for. If you are scared, the first time this candle prints here, you want this to become a bullish order block, right? Because you have expansion to the high, FEG, down candle, must be a bullish order block. So without saying there's a trade here, can we agree that at least a plan for if you want to be bullish or bearish is staring at you now? I'm not going to tell you which one to pick. I know we can see what happened already because this is hindsight. But if you can frame what here makes you bullish or bearish, you shouldn't have a problem. If this is your bullish order block, it's not confirmed, so you can't buy. If this is your bearish order block, and this is your FEG, chances are you're going to sell this. You're going to sell this because you have 2 up candles, etc., etc. You know what this is already. I explained this logic 2024, I think 2025. I don't remember. So there's your short. What are you targeting on a short like this? The open price or the low since the open. When it gets to that low or open, you're now essentially trading at the key level again. So it means key level plus a reaction to your key level tells you your bias. There are traders who will get this entry or even this entry for some strange reason. Price trades all the way down here and they do absolutely nothing but watch. Then they close right up here. I'm not one of those persons. I don't share that brand of madness. I believe in 50 points on a daily basis. That's 1,000 points monthly. I can live with that. With one contract, I think that's good enough for a lot of persons too. And if you trade in 5 contracts, it should be even better. So whatever. By itself, that's a great trade. What do you look for when it gets there? You don't hope it continues because you don't trade anticipation. You trade confirmation. And the first thing of trading confirmation is if this, then that. See how if this, then that is not for bias? It's for confirmation. Anyway, if this, then that. If we expand below here, chances are the retracement is done and we're going to get the low of your range. What if it does not expand below here? I don't know what expanding looks like. Then you're lying because we already know that continuations are going to be closing strong. Yeah, let's put it like that. Continuations close strong. It's closing strong above the high with a body that's strong. It's not, then it's not. Simple. Every time it expands, it creates a range. If we leave that expansion range, think if it's sweeping or running liquidity. FEG at the higher, FEG at the low, or not. Not rocket science. So let's say 120 all the way down to, that's 50 points. Full stop. That's 50 points. If you didn't get 50 points there, opportunity 2, right at 820. Coincidence? I think not. You're short. Bam. 50 points again. What is it doing here? Running through the level? Sweeping the level? This market is dying. Of course not. It's not closing strong. Still not closing strong. You're trailing instead of, scaling out, running down equity like ICT taught us. You're not doing that. You're scaling out. You're trailing your stop to a ridiculous place because I'm managing. No, you're not. You're being afraid. Rules say if it's not closing below here, you cut. It's expanding below here, take something off there. That's the key level. 1, 2, 3, 4 times the market didn't close below here, and you're still holding at break even, thinking it's coming in the next candle. Really? No. That's not trading. You know that. Not calling anybody out, but you know that. You've done that too many times. Comes up. God forbid you think this is a better entry and you start scaling in again. But anyway, key level is not showing you a reaction that tells you to continue going short. It's not saying go long, right? Don't get me wrong. It's not saying go long, but it's not saying go short. So don't go short. Market expands and closes above the key level and the last place that, I don't even know what to call this, just this high. Yeah, there we go. It closed above that high and it's closing with a FEG. Now, old ICT teaches us that FEGs here, and old highs are being taken, is not a reversal fractal. So why are you short here to get this again? That's not a reversal fractal. It's a continuation fractal. Does this make sense? EQ of the range, fractal, time of day. This is significant. I don't have to buy this. I don't have to buy anything here. I could buy after this candle closes because it already expanded and retraced and it's expanding again. No, you can buy. And if you like buying below candles with no wicks, then life is good. And to pull the chart over. See? So you got a short there for 50 points. You got a long here at 180. Left of here is this high. So 180 to 270. That's 90 points. You're done for the day. But I'm not going to tell you that this is not a trade. I would take this too. On an M1 chart, if I can see this, after it swept here, after this candle closes, and again, we're expanding. So this is likely to stay open. I'm buying this. And again, I'm looking left for that high. I'm trying to get that. I want 50 points. Let's say I bought the open right there at 207, 250, 50 points done. Literally 50 points done right there. That's over 200 points being stupid because you're buying long in a bearish order flow. And that's it. The market starts to break down here. Okay? This is where stupid people come out to play. All of this happened. You sold, you bought. Then the market starts to break the things that made you want to buy. So it's invalidating being a buyer, but you're still looking for reasons to buy. Which means you know that the order flow is no longer bullish because after this was closed, there's no reason that says this is a strong buy. Oh, EQ, that's enough? No, it's not. You're looking for longs. Count the losses. Count the amount of losses somebody would have taken because they want to go long here. Down candle, buy, stopped. Down candle, buy, stopped. Down candle, buy. I don't know what this did. But I'm just saying, right? That logic by itself is enough. Now, what do you do? I don't know the speed is up. Sorry. Anyway, I don't know. What is this? What is it? Or is this today? Ignore. I don't know how to do that part. But the point is this. Put the indicator back on. And go back to wherever I was marking up. There we go. So I just did this. So the next day it's the same thing, right? This is showing you 8:20, but I want to show you I want to bring it to like 7 o'clock. There, 7 o'clock. Same logic. The bias is saying bullish. You're opening in discount. The same thing that made you go long here on a scalp, you can go here with expecting more. You don't have to take more, but you can expect more, and that makes you size in. Not hard. In the expansion, you're looking for the same reasons that supported being long here. Expansions with FEGs. Expansions with, this is an M15 chart, and I can see a FEG right here. Hope you can see too. FEG there been held. FEG being held at equilibrium. So it's not broken like this one that says don't go long because that's broken. It's been held. And then we close above. You're buying. Easy. Next day, 7 o'clock on the dot. I think I've given enough examples for this question. I can move to the next one now. 7 o'clock. There we are. You're bullish in premium. This is easy. Like this has to be easy. I'm not going to go to an M5 chart for this. You can anticipate. You're bullish in premium. You want a discount run. Runs a high. Lower time frame CSD must be here. 50 points. Discount. CSD. You're looking too long. That's it. Next day, you're bullish. And this is the last example. I'm getting carried away. Bullish, discount. You're looking for something to go long here. There we go. On to the next question. Right, it will. So it's 7:20, but it's 8:20 now because of the daylight savings, right? But yes, that's that. So if you like being fancy, unconventional time frame like these can be magical. It's a 10-minute chart. It highlights every significant open price without a clash. Like the M15 would not show you 720, which means the M15 cannot be algorithmic. Anyway, moving on before you crucify me. Yeah. I didn't see any more questions, so I guess that we're good. Questions. And to the mention of 10-minute. No, 10-minute cycles are not a thing, as far as I know. M4 is algorithm. So here's the thing, right? Remember what I just said? This price right here should be visible. This one right there. Is it there? Yeah. Looks like it is. So if you've ever asked me about M4 versus M5, and I said it doesn't matter, it's because it doesn't matter. If you know what you're looking for, it doesn't matter. Versus doesn't look as sexy. See, this doesn't look so sexy. Sexy on M5. I think I just showed you M4. Sexy on M4. Sexy on M20. What more do you want to see? Brett Constant, man himself.
Yo,
What's good?
I'm good. I'm good. I just had a quick question. As far as the rebalancing, you gave a perfect explanation for run versus sweep.
Hmm?
Is there any like adjacent definition for rebalancing for like that 7 to 920?
Um, I want to say no because I don't have any notes of it existing. Imbalances are either going to be a breakaway gap or they're going to be rebalanced depending on where they form. And from my experience, there are FEGs or breakaway gaps that you can look at them and you can say, okay, because this is here, I can use this to frame a bias, and that's good. But then there are imbalances or FEGs inside a range, and you're saying, I would like this to not do this simply because you have a bias. And there are times when it's respected, and then there are times when it don't. So because I don't have that, this is very, very likely. Unless I'm looking at it on a case-by-case basis, I don't try to teach or talk about that because I don't know. I can look on a case-by-case basis. We can be looking at price and we see a FVG and we're like, oh, this FVG is likely to stay open because it's forming here and this and this and this and this and this. And you can read them again on a case-by-case basis. But to make a mechanical rule around them, at this point in my career, I'm unable to do that. And I don't have anything that supports that I should. So I don't. Because I'm a simple guy. I'm a simple guy. A chill guy. Hope that makes sense. Not gatekeeping, just nothing supports it. A brush over gold and Bitcoin. I'll do gold. Bitcoin is a mess. I just heard the rooster. This is the genuine kitchen. Absolutely. The roosters are programmed to crow when they hear sauce. That's why they're in every call. No? Going to gold. Oh, yeah. Here we are. Here's gold. Same logic, same everything. 7 o'clock on the dot. There we go. So the background says green. So the bias is ... Then we have the market going higher. So automatically you're going to grab L open price. Sorry, I don't like to see these dots come off. I'm trying to get them off. I think you have to click outside the indicator. There we go. An open price. Your bias, you want to buy somewhere there. I'm not going to argue that buying this is beautiful. Open price, you close above, you retrace, bam, go, no problem. But I'm going to be worried about that range right there. Price comes, we sweep, full margin. I think I bought this. I know I sold this. I think I bought this too. But I was mainly selling gold today because I like selling gold when I'm bullish Nasdaq, and I wanted to see Nasdaq lower today. Lies, I wanted to see Nasdaq higher today to wrap up that Q4 high. So I was selling gold a lot. Yeah, this was signal I got actually from the missus. The missus, yeah, and I sold that. Anyway, moving on. So yeah, same logic, right? Gold is a little bit of a miss, but if you look closely, you can see rejected, long, big down candle here. That's not bullish. If it starts to trend higher and it's closing strong, grab the body, fib. Fib because I just want 50%, that's all. No sequence to drag in from open to close. There we go. So now this is the same as that black line. The only difference is we're not trading at that black line. It's just 50% of the range. Close above, discount run. You're looking to go long. It comes and it closes back above. You're buying the opening of this candle right there. And then there we go. There we go. Mentorship went. Mentorship. My dog loves the rooster. Yeah. The roosters are tranquil. I have no plans for a mentorship, sadly. Not sad. I don't want to say it sadly. It's not anything mystical like that. I was having a whole lot of persons understand stuff but couldn't trade it, and kind of didn't like it for a little bit. So I said I was going to. I said firstly it was happening because there's too many silent persons. Persons pay, join the group, and they just keep paying, and they hide away. And then they hide away, and they get challenges, and they bring them down to negative 9%. Then they say, Kisha messed up. And I'm like, why didn't you kind of, reach out when you were going to get it? When you were 2% down, so we could talk about the plan and stuff like that. Why wait until it's 9.9% when you have $10 left? And then you're going to tell me that you're going to YOLO the challenge. That's not a strategy. I can't give you advice on that. I'll just support whatever your decision is at that point. I can't do anything. So yeah, so I kind of said I'm going to move away from the mentorship, but I'm going to first step back from being in the public. Because if you're in the public eye and you're posting charts and trades a lot, you're going to have people ask you questions. I know, I was there. So I stepped away from Twitter. And I stayed on Discord. And then I realized that I didn't know a lot of persons on Discord, but I know a lot of persons that were trading. So I told the guys that, hey, listen, let's stay here with the persons who we know are serious, persons who are trying to trade and take care of themselves, not trying to run mentorships and all that. So that's how it kind of started. So then the Discord group kind of died down a little bit because I was focusing on those guys. Then the bootcamp started. And the bootcamp is where really I felt energized to teach again, to be honest. So shout out to the guys in the bootcamp. You made me enjoy this again. And yeah, I just stuck with the guys in the bootcamp, and then the guys that they recommended were actually serious. So I don't have any plans to do a mentorship, to be honest. The only two things I have intentions of making public are, one, something like this that makes your daily bias easier for you, and the website. Where the website is, we're training or feeding AI TCM content to make it a little bit savvy. And then that website is going to house like everything. And then I tried to do it some time ago, but I'm not smartest person, so it didn't work out. So yeah, so somebody who actually knows what they're doing, helping me, or took the initiative to do it. So now, once he gives the green light that the website is fully functional, now make it available, and for his his work. Naturally, he'll be compensated. So that will not be free, because maintenance is not free. So yeah, outside of those things, I don't have anything else to offer you guys. Patreon is creator support. It's not a mentorship. So if you support me on Patreon, you automatically have access to my DMs. If you don't use it, then that's not me. That's you. Yeah. So if you don't see something on Patreon, it's because nobody asked for it to be there. So I assume that people have already grasped that understanding, and I move on, and that's it. Okay. That's how it works. This is the first time you are discussing the 7 model. I've been MIA for about 4 to 5 months. That means you're old TCM. If you're old TCM, you're legacy. So just DM me and we'll get you up to speed. Can you tell Tradeovate to reset the date? I've been hearing a lot of stuff. A lot of platforms froze this morning. But it's FOMC. So explanations are going to come if you mess up on this day. So don't go strong arm in high impact days. I find Discord chat became so quiet. There was way much action. So the reason, in my opinion, so here's how my brain works. If you pay for a subscription, right? Like if you pay for Disney Plus or Netflix, and you don't watch anything on Disney, you don't reach out to support to say, hey, I'm looking for this. You don't use a VPN to try to watch stuff. You don't do anything to help yourself, but then you complain about what's available, then I think you're crazy. So similarly, if you're in the group and you go quiet, I believe that you're crazy in the sense that you're already profitable, but you enjoy the community, which is fine. So you're just hanging around, and it's creator support. I get that part. What I don't get is when you're not profitable, you're not seeing any gains at all, but you're in the group and you're suffering in silence. So we've had 1 million calls, and you've heard me get passionate about persons who join the calls and never have any questions, or you're in Discord, you never tag me in anything, so I don't look because I don't get tagged. So I answer the persons who actually ask me questions. So yeah, Camaro, Ben, you guys know all the persons who are always posting, always texting. These guys are, to me, you're always invited to anything I'm hosting, always, because you show your own results without. So I know you're serious about this. Some people give up already because you're comfortable with your job because you wanted to quit, but it didn't work out. And I get that. That's fine. That's fine. You get paid for your decisions in trading. So if your decision is it's not working out and you choose to move on, I'm fine with that. I don't like, however, if you pay me and then you sit down and I try to reach out. There are many persons I've done like spontaneous checkup on. Hey, I haven't seen you posting. You okay? You good? No response. Okay. I did my part. I can't do anything about that. So yeah, so the group got quiet as less persons wanted to engage, and I didn't want everything to be a lecture. I don't want to just always be saying stuff and nobody is saying. From that call, this is what I understood, and I applied it here, and it failed. What did I do wrong? So I can have another call and clarify it. Or from that call, I learned this, and it's working. You notice there's been no excessive talk about the 2-bar fractal since the kitchen video, because you guys have shown me that you understand. I don't need to talk about it if you understand. What you don't understand is what I talk about. I don't know, but yeah. So again, for creator support, if you want to hang around, support, TCM, ask me to make videos on stuff you don't understand, I love it. If you just want to share your journey, then sure, I love it. If you actually need help, that's going to require my time, then you're gonna get charged for that. Of course, don't ever be good at anything and give it away for free. But yeah, that should not come as a surprise. Just reach out, we'll talk. Whatever. I offered you guys access to the boot camp, but I wanted to keep it small. Now the boot camp is, I don't know what to call it. I think everybody's pretty much on a level now. They're fine. I don't think I need to post what to do. They can tell you. I don't post. I'm not the first person to post every day anymore. People actually know what they're doing now, so they're fine. So yeah, no plans for another boot camp, by the way. Before you ask, no plans for another boot camp. It's getting hard to contain content, especially on Discord. But I'm figuring out ways to fix that now. So yeah. That's it. Not WhatsApp. YouTube. I don't know a lot of YouTube videos anymore. Again, because I don't know what you guys want to talk about. I don't. I can't just go do a video about something you know already. So the whole point of the feedback loop is for you to reach out to me and say, Kish, I don't understand this. And if we talk about it via text and you don't, then we do all of that. Yes, video we posted it to YouTube. No charge. It's not about giving away everything. Remember, guys, if you've been with me since 2020 or 2021, thereabout, the first motto that TCM had is we do this to show it can be done. That's it. It wasn't about the guru to be the best trader in the world. It was never anything like that. It was we do this to show it can be done. So when we started, it was all 1v1s. But then shortly after, I went full-time trading. 1v1s were consuming 8 to 10 hours of my day. And if you were back in that time, you know how we had to reschedule 1v1s. So that clearly wasn't going to work. So we moved to more group calls. But then we still had a lot of those. So now I only do 1v1s on request. If you reach out to me, we're talking about something, it can't be resolved via text, and we're available, we schedule a 1v1 call. If you are a part of anything, any paid subscription, I will not charge you for a 1v1 call, for the first call. If you're not, then we make an arrangement. Then that's normal. That's just business. But outside of that, yeah. What's NASDAQ doing, by the way? This is not NASDAQ. I had a drawing.
Tell it to pump.
I don't doubt it's going to pump. I don't doubt it at all. Oh yeah, this is the drawing I had. There it is. So we were looking at this earlier before the buyer stuff. And we were saying, remember what we were saying? When it closes above here, that's when you don't want to buy a retracement. There it is. If it does not close above that, I would not want to go long. Standard. So then comes the easy part. Something like that. Something like that. Stop loss look hella wide, so size had to be reduced. Or if you're using the FEG right there. And then I'd look at something modest like the AM high. Time of day is not the best, but I'd still want to see that. So that's what I'll be looking at had I been trading. But I'm not. Got 1 minute real quickly to see if I could have gotten a. See? On the 1 minute, this would have been better. Or to be a little bit more realistic, reject, close above, use that, put your stop right there. And then looks unrealistic there. Doesn't matter. you can see what it is, or stick with the original plan. Either way, I wouldn't want to see it coming back below that FEG, and by then you should be already moving. Let's see if there are any more questions. Something of the books. Oh, somebody mentioned something about the book earlier. I didn't respond because the book is not a public concept, and yeah, but it basically rejected of the book high. Anyway, moving on. Something of the books, Robin Cups for Bands. I've thought about it at great lengths, to be honest, and a part of me wants to. We will see. We will see. You learn more talking to people. Yes, that's the thing as well. So if you're in a group with everybody who's learning and they're open and honest and they're talking, you get to bounce ideas, and it's so much better. Wins before ICT. No, let's not entertain any madness. Earnings after close, Meta Tesla. Oh, interesting. We'll see. We will see. But yeah, if you guys have no more questions, I guess we can end this. I have one v1 call scheduled for tomorrow. So if I see questions in the chat and it requires another call, then we can hop on a call. If not, saw the stock exchange. What in the world? Never heard of that one. But yeah, guys, if you have known me for, unless you just met me, this has always been my personality. You reach out, we talk, we move on, we get better. There is no suffering in silence. I don't like it. I don't know why. I just don't. But yeah, let's talk in the group, and I'm going to go back to being a human being until tomorrow morning. Do enjoy the rest of your day. Don't go chasing FOMC PA because it's FOMC. Why would you? All right. I'll post this on YouTube. Like and subscribe and all the good stuff. See you.